Good afternoon. Welcome to Mid-Cap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra and with me as always is Vivek Iyer. Very close to the day's low. We are off around 250 points from the highs of the day. We started the day at 25,900, very close to that mark, but now we are at the 25,650 mark. So big cut from the highs, and mid-caps too contributing to those losses that we are seeing. In Bank Nifty, which was in the green, has also slipped into the red now.
Good afternoon, Sonal. You know, every buying is actually being seen as a selling opportunity, especially as far as the bears are concerned. And remember, two weekly expiries today as well as tomorrow, given the fact that 15th is a holiday. So that's also keeping the market under significant pressure. But a lot lined up on the show, so let's start off with the top headlines. Market slips to the day's low ahead of the Nifty weekly expiry, giving up all the gains from yesterday. Real estate and pharma under pressure, while capital markets, metals and financials trade in the greens. Mid-caps fall in line.
Realty stocks under pressure for the second straight session amid concerns of a slowdown in demand due to weak macro environment. The Nifty Realty Index is down over 1% and down nearly 19% from its 52-week high.
Balu Forge is upbeat and up over 10% in trade today in a volatile market as the company clarifies that the IT raid is complete and no incriminating documents were found or seized during the operation.
Metropolis Health shares recover sharply from lows after the management tells CNBC-TV18 that they will be expanding to 220 genomic tests going forward and that they are looking organic growth of around 13 to 15% for FY26 and FY27. All right, those are the top headlines as we've been discussing the market fall and the fact that most of the sectors are contributing to that as we speak. We do have the Bank Nifty, which was in the green for a larger period of time, but that has slipped into the red. The advance decline ratio is in the favor of declines, and at a point in time, it was in favor of advances. So the advance decline, those lines should come up for you on the screen. They've merged and now in the favor of decline. So that's the texture of the market. The small cap index is in focus as well. It was in the green for a bit, but again, let's take a look at what it's doing right now. The small cap index, that one too. The mid cap index, of course, is lower in trade, 0.5%. The small cap index, though, bucking the trend up around 0.3%. But the texture continues to be on the bearish side.
That's right. Like you mentioned, realty has been under pressure for a while. Even the capital goods space, right? That particular pocket, today L&T has joined the pack. A lot of the large cap names, mid cap names, all of them under significant pressure. That's also contributing to the fall as far as the markets are concerned. But this is our special segment, Mid Cap Movers. Sudarshan is standing by the wall to take us through all of the mid caps that are moving around in the session.
So while the market is under pressure, one stock that is holding on to the gains is Manappuram Finance for the second straight day. If you remember, on the Friday, there was a big fall on the Reuters report. But for the second straight day, we are seeing a big gain and also the support coming in from the price, gold price, and that's trading around the record high. So Manappuram currently up almost 4%. Now, some of the stocks have slipped to 52-week lows amid the weakness that we are seeing in the market. And on top of the list is Dixon Technologies, currently down almost 4%. At one point, it was down almost 6%. There is an expectation that there might be some moderation in the mobile revenue growth, and also in FY26, companies in all probability miss the guidance. Second name comes to Godrej Properties. Amid the weakness in the entire realty space, one stock that has fallen the most in last few trading sessions is Godrej Properties, and currently the stock is below 1900 rupees and trading at 52-week low. Next name is IRCTC. Amongst all the railway packs, in the last few, in the last 2 to 3 weeks, we had seen a big move. But after that big move, we are seeing a big fall. And one stock that has fallen the most in the last few trading sessions is the IRCTC, currently at just around 630 rupees and at fresh 52-week low. Last one, ahead of the earnings, Tube Investments has slipped to 52-week lows, currently around 2400 rupees. Lastly, about the few stocks that have seen unusual moves in the last 1 hour. First name on the list is Oriental Hotels, currently up almost 4%. At one point, it was up almost 7 to 8%. Company has released Q3 earnings, and by the first look, earnings looked strong, and that's the reason you are seeing you can see the chart that had seen an uptick in the last 1 hour. Second name, Kiri Industries, after the stock was under pressure for the last few trading days, after the Dash Star news and the company's commentary that company had said to our channel regarding the proceeds that company is going to use, we had seen a big fall. But today, this stock is up almost 9%. Last one, Oil India, currently up almost 4%. Even big gains we are seeing in ONGC, tracking the move in the crude that we are seeing. So that's the reason upstream oil companies are higher.
Okay, all right. Some interesting names there. Thank you so much for joining us with all those names, Sudarshan. A big move on the market on the downside. Let's get Shrikant Chauhan, EVP and Head Equity Research at Kotak Securities. Shrikant, what's the market texture suggesting? Will we see further lows from these levels? It is a truncated week again, and because of those two expiries, do you think we'll see more volatility now?
So for market, yes, we are finding a lot of difficulties for the market to hold at higher levels. There is like volatile news flow, and because of which the market is finding difficulties to regain the lows that to regain the highs that it has made in the near term. While looking at the entire setup of the market, it is very clear that we are going to see furthermore weakness if it breaks the levels of 25,500 in the near term. Because yesterday, the way it recovered, we are of the view that 25,500 is now going to act as major support for the market. But at the same time, at higher levels, 26,000 and 25,900 going to act as major resistance. And today we saw some profit taking after hitting the levels of 25,900. So broadly, I am of the view that for the next few days, the market will spend some more time within the range of 25,500 and 26,000, and we can see some sideways or stock-specific activity in the market.
Well, Shrikant, amidst the broad-based sell-off, any individual trades for the day, all buys, or do you also have a few sell calls?
So I think, say, like in this type of market, we need to go for those bets where we can take some positional bets, because with a very intraday view or with a very short-term view, it's very difficult to trade because of the news flow. In that specifically, we like ONGC, which is currently around 240, 242. Here, if we see the technical pattern of the stock, then it has spent a lot of time between the range of 230 and 260. And the way there is like specific news flow on the crude side, we are of the view that the stock has completed its downward correction, and now the stock can move towards the levels of 260. So there is clear cut and upside from current levels with a very minimal downside in the near term. The other stock on which we are bullish is Eternal. Here also the stock has spent a lot of time between 280 and 290. Today, eventually it has broken the level of 290 and it is consistently sustaining above the same. So while looking at its entire setup, it has spent six months nearly to double from the level levels of 200 to almost 400, and from there all the way it has spent nearly 3 months, 4 months in consolidation period. So I am of the view that the stock has completed its time-based correction, price-based correction, and now the stock is ready towards the to move towards the levels of 320 or 330. So Eternal also looks attractive at current levels.
Okay, all right. Take that point. Thank you so much for joining in and telling us the next important levels to watch out for and individual names as well. Let's talk about the insurance space now. Sources say an IRDAI consultation paper on regulating commissions is likely to be put out next month. Yash is joining us now with more details on this one. Yash.
Well, Sonal, we finally, looks like we're reaching the point where the whole suspense in terms of how the IRDA, the regulator, wants to regulate insurance commissions would be reaching. What we've been given to understand from our sources is that the insurance regulator is likely to release the consultation paper on regulating insurance commissions as early as next month. There is a bit of process which will be conducted in the current month towards that consultation paper, and finally expected to be launched in the next month itself. The regulator at this point of time is looking to implement new commission regulations from 1st April, that is the next financial year. What we've been given to understand is that the regulator is expected to block all leakages when it comes to ambiguity over insurance commissions, and at the same time see to it that insurance commissions come down as well. First thing what we've been given to understand is the regulator is looking to cap segmental commissions as well as lowering expenses of management limit. Of course, expenses of management includes both commission as well as operational expenses. One thing the regulator is considering going back to the earlier regime of capping segmental commissions, which means motor commissions will be capped at certain level, health commissions will be capped at certain level, term life insurance commissions to be capped at certain level, and lowering the current expenses of management limit as well, which is about 30% for general insurance companies and 35% for health insurance companies. Also, what we've been given to understand is the regulator is also looking to rationalize the expenses of management limit, which means if It is at 30% for general insurance companies. In all possibilities, the expenses of management limit could come down further from that 30% and 35% for health insurance companies. Similarly, for life insurance companies as well. So two things, bringing caps on segmental commissions is what the regulator is looking at, along with continuing caps and rationalizing those caps on expenses of management limit. What we've been given to understand, this idea has been floated amongst the regulatory body and all nodal departments, life, non-life, actuaries, distribution, all of them are expected to submit their responses to the IRDAI chairman by the end of current month. And next month is when we can expect the consultation paper to be released as far as regulation of commission itself is concerned.
Well, thank you so much, Yash, for joining in, giving us all of those details regarding the capping of commissions as far as the insurance space is concerned. But Yash, ICICI Prudential Life just came out with its Q3 numbers. It appears to be a strong set. The stock is at the day's highest point. What's your first take on it?
Well, the numbers for ICICI Prudential Life certainly look strong, and what particularly looks strong is the value that they've been able to derive out of the revenue growth that they've done. If you just look at the revenue growth, the premium growth, APE, not very impressive, growing at about 4%, coming in at about 2525 crore versus 2438 crore. The expectation was much higher as far as brokerages are concerned from the annualized premium equivalent. So that has grown at just about 4%, but the value which they've derived from the APE looks pretty strong. Value of new business growing at 19%. That has come in at about 615 crore rupees. Versus 517 crore rupees. Now, the second thing which they've been able to do very strongly is the margin performance. That has been very strong again. In the third quarter, the margins have come in at about 24.4% versus 21.2%, so about 350 basis points improvement as far as that margin performance itself is concerned. The expectation from brokerages was about 23.2%. So, of course, VNB margins have come about 100 points higher than what the brokerages were expecting on that front also. So, strong performance on a year-on-year as far as value is concerned, also on the margin front ahead of what the brokerages were anticipating.
Okay, all right, 3.5% higher. What a spike on the stock. Good numbers. Margin expansion is what the street seems to like. ICICI Pru on our radar. Yash, thank you so much for bringing us all those details. We'll give you some more time to analyze these numbers in greater detail. But with that, we'll slip into a short break. Before we do that, just a quick heads up. If you're thinking about where the real opportunities for 2026 lie, Market Forum, the Alpha Generators for 2026 is where that conversation begins. The Alpha Table awaits. Join CNBC-TV18 as we host the ultimate confluence of India's market movers. Tune in on 13 Jan, Tuesday, 4:30 p.m. onwards, only on CNBC-TV18. Welcome back. You're still tuned in to Midcap Radar on CNBC-TV18. This is our special segment, Midcap Spotlight. Sudarshan is joining us now. In a weak market like this, one stock which is bucking the trend is Balu Forge. Sudarshan, tell us more what happened here, what does the company do, and some more metric.
So before I talk about the company and what exactly the news is, take a look at the stock move. So there is a big gain today. Stock has moved as high as 10%. But from January 6 to January 12, there was a fall of 24%. On January 6, the price was as high as 582. And on January 12, it had fallen to as low as 440. And from that level, today it has seen a big surge and moved to as high as 480 rupees. So now what exactly company does? It's a manufacturer of crankshaft and used in automotive, agricultural, marine and industrial, and it supplies to OEMs in India and the overseas. Now, what's the news? What exactly made the stock gain this much today? So there was an IT raid which had started on January 7th by IT Income Tax Department, which got concluded today. And now after that, company released the statement, and which company is saying that it has provided all the details that was asked by Income Tax Department, and there was no incriminating document that was found or seized by the tax department. Also, business operations and the production continued as usual, and there is no impact as far as the financials are concerned. So The reason is the conclusion of income tax department search, and there was no document which was seized by the tax department. That led the big gain in the stock price, but still it's much away from the price that was ahead of the income tax department search.
Well, thank you so much, Sudarshan. Clearly, Balu was an unusual gainer in today's overall market weakness. Well, ICICI Prudential and HDFC Life are two names from the life insurance pack that are doing quite well post the results of ICICI Prudential Life. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, the news on the bank Nifty is that it's attempting a mild recovery, 0.3% recovery from the day's lowest point. When you're looking overall at the markets, the Midcap Index continues to languish 0.6% down. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.